Okay, just counting down to the AMFI data, while of course all of us equity watchers are awaiting those SIP data. But just on a net basis, you have seen inflows more than half actually on a month-on-month basis, because it stands at about 52,443 crore rupees this time around, as opposed to a quantum of 1.78 crores on a month-on-month basis. The equity inflows, they also have seen a marked dip on a month-on-month basis, standing at 33,430 crore rupees versus inflows of 42,702 in the previous month. Total AUMs, that's largely the same, 75.2 lakh crore rupees versus 75.4. So I don't think there should be much of a degree of, or rather an aberration when it comes to the SIP data. And the equity AUMs, they stand at 33.1 lakh crore rupees versus 33.3 lakh crores on a month-on-month basis. It's only the net inflows which have seen an aberration both for equity as well as overall. Still got Dipan Mehta from Elixir Equities with us. Dipan, anything else that you've made a change on, either a view or actually taken position somewhere afresh or cut down anything?
Okay, we are getting into disclosure zone. But, recently there was news in the market about new professional CEO being appointed for Vadila Industries, which is India's third largest ice cream producer. And I think that after many, many years of a lot of challenges and infighting within the promoters, I think all of these issues have been resolved and they have a professional to manage the business. The brand is extremely strong and it has got great scope for expanding the rest of the country as well. It's largely focused in the western region. And I think that amongst the FMCG space, ice cream is one of the least penetrated categories as well. And with improved power demand and stability of power, there's great scope for ice cream demand also to go up in the country. So we're very positive on this company. Having said that, it's a company in which we and our clients have invested, so our views are definitely biased.
Okay, so that's the view coming in and some of the stocks that Dipan is liking at the moment. Dipan, thanks so much once again for joining us and thanks for your time today. Okay, let's move on, and we also have Mr. Sunil Subramaniam, market expert, joining us on the show. We have the AUM numbers flashing and we also have the AMFI data flashing. We'll bring you my colleague Sharad on board soon with the SIP numbers as well. But before we do that, we have Mr. Subramaniam with us. And Sunil sir, give us your read-through of the kind of moves that we're seeing in the market right now. The trend of broader markets outperforming the benchmarks, it's once again back. What is your outlook on where there is more opportunity in the market right now? Is it towards the broader end, or should one still be safe, playing it safe with the larger caps?
So actually, if you see, playing it safe with the larger caps is the word you've used. But I wouldn't say it's today's safe territory because, the FIs are the ones who've been selling. So actually, large caps have been under a fair bit of pressure because the IT index there, the banking index, they're all recently because FI flows haven't come back despite the good news on the domestic front. It's the domestic flows which are holding up. And I think if you see the fund managers who get the flows, more than 50 to 60% of the flows is in the mid and small cap and sectoral funds. So consequentially, buying support is there for the broader market. So the broader market is a safer place, is the larger cap space, right? Which is today, because of the uncertainty around FII flow, that's a little more volatile. So it's a little bit contrary in what I'm saying. And so I would say that actually the recovery should happen in the larger cap space. So coming back to your point is that, yes, you should have a decent allocation to large cap because you go by the latest news that we are all trending on today is Mr. Trump's rapprochement towards India, right? After his tweet saying that India has gone into the Russia-China corner, he's now backtracked. He's talked about his friendship with Mr. Modi, how he's a great prime minister, and he's going, the trade talks are going on. So if that's the case, then FIs, and yesterday, after a long time, FII flows turned positive 2,000 crores. So I'm saying that if this is a sign of the things to come, and with the Fed rate cut, 88%, 90%, 25 bips rate cut is factored in, it should ease more flows towards emerging market, and India should get its share because our share in the emerging market index is almost 17%. From a passive perspective, this flow should come back. So I would say that you should now diversify across large, mid and small. Domestic buying support will continue, especially since GST, you have had the consumption pact show a sharp rally. There will be some profit taking in that space, but I would still say that from medium term, it's the Indian economic growth which is still going to drive the market, and that's probably my space then is capital goods and public sector banks, those which are domestically oriented. But when FIS come back, IT will be preferred, so there will be a contra play there. And if the trade deal talks indeed are going to go through positively, then the export-oriented sectors which got hit will probably be also showing a recovery. So today it's better to be broad-based, not just across sectors, but also across the cap curve. I think that's the best and smartest strategy to be in today, because I do think that the FIIs have ignored the good news from India for pretty long now, and sooner or later there should be a reversion to mean, and they will start coming back into India.
That's about the flows, and yes, of course, we are somewhat playing that happening in the markets as well, because IT is indeed one of the top gainers when it comes to Nifty 50 sectoral moves. But yes, as we have been waiting by for the SIP data to trickle in, we'll try to find out whether or not we manage to scale past and sustain above that 28,000 crore mark or not. But before that, let's put the spotlight on the PSU banking space as well, because in the banking space, the PSU banks have outshined the private banks this year so far. But let's find out what are the key reasons for that. And for all the analysis and details, let's go across to my colleague Varun, who is standing by with that. Varun.
Well, so the PSU bank index is actually outperforming the other indices, not only today but also in the last 6 months. Let's look at the numbers. Today it is up by around 2%, but if you look in last 1 month, it has been almost flat, whereas the private bank index, the bank Nifty index, and also the BSE PSU index have actually declined. Also in the last 3 months, it has been the same case. Also in last 6 months, if you look, the Nifty PSU bank index has actually shown a growth of around 21.5%, actually outperforming the private bank index, the bank Nifty index, and also the BSE PSU index. Now, there are several reasons because of which we have seen this outperformance. First of all, it is the earnings, because if you look in the Q1, there has been decline in net interest margin and also asset quality across banking sector, but the overall performance of PSU bank was better than private banking sector. Also, if you look going ahead, there would be decline in net interest margin, but also you will see the overall cost of funds coming down, and that will come down more for PSU banks. That is what is understood among the analyst community. Also, with the CRR getting cut from September, you will see more liquidity coming into the system, which will be beneficiary for the overall banking sector. The GST rate cut or the GST rate rationalization that has been done will actually impact the overall economy. It would provide stimulus to the economy, and there is a ICRA report which says that it will impact the overall credit growth of banking system as well. Also, the downward repricing of deposit base will actually make banks more competitive when you compare to other debt capital markets. So this is one of the other tailwinds for overall banking sector as well. Also, if you look at PSU banking sector valuation, majority of the PSU banks many of the PSU banks are still trading below the price to book value of 1, and if you look at the private banks, they are trading around 1.52. So the valuations are also reasonable, and the resolution plans of some of the companies like JP Associates will actually put some money into the kitty for PSU banks, so that would again be a benefit for PSU banks as well. Also, if you look at the credit growth, there was a time where the credit growth had actually slipped into single digit, but it is back to double digit, because if you look in the 3 fortnightly data of RBI, it shows the credit growth is actually back to around 10%, though it is double digit, but yes, low double digit, but yes, there has been a rebound, and PSU banks are one that would actually get major benefit of this revival in credit growth. So there are several tailwinds because of which you are seeing PSU banking index actually outperforming Nifty bank, private banks, and also the overall PSU index, not only today but also in the last 6 months.
Okay, that's that on what we're seeing within PSU banks, which by the way are in the limelight today. But want to focus in on the AMFI data right now, and the SIP numbers are out. So let me quickly take it across to Sharad and get in what the individual classification performance has been like. And of course, after that, we will speak with Jaiprakash Toshniwal as well. But Sharad, you go first. What have been the sectoral flows like? What have large cap, small cap preferences been like? And what is the overall, SIP data indicating?
Well, the overall SIP data is indicating that the retail strength is still there. It is just a minor cut coming in if you compare it on a month-on-month basis. The SIP numbers is still comfortably above the 28,000 crore mark. Now, looking at the overall numbers, the inflows that they have actually come down at 52,443 crore rupees. But do remember there is an outflows coming in from the liquid funds. That's why the numbers are looking less. Equity inflow that has moderated. Last month, July was a record high equity flows coming in. But now there is a moderation coming in, but still it is above the 34,000 crore mark, and this is the third month in 2025 which is happening. So there is no cause of concern as such, but of course the AUMs, if you look at it, they are still near the record levels. Now there is a sectoral churn happening as per the analysis. Except dividend yields, all the equity schemes have seen inflows coming in, but there are two major changes I'd like to point out. Of course, with respect to the large cap funds, over here the inflows have gone up by 33% on a month-on-month basis, while the small cap fund inflows that has significantly come down 23% on a month-on-month basis. Mid cap, however, has seen inflows of almost 3% incremental coming on a month-on-month basis. That means there is a moderation in mid caps, but yes, the mutual funds are clearly steering away from the small cap space. Now the sectoral funds, the major chunk blow coming in here, 60% downtick on a month-on-month basis when it comes to the overall flows coming in. But flexi cap, that has maintained its lead for the second straight month. There has been strong flows coming in. But the culprit has been the new fund offers, the NFOs. These NFOs have actually come down drastically, and that is why it has impacted the equity flows as well. But interestingly, equity segment still sees its 54th straight month of flows coming in. And do remember, only you could say 2,900 odd crore rupees of flows have come in the NFOs which were launched in the month of August. So NFOs, sectoral theme and small cap funds have seen a significant downtick on a month-on-month basis. But on the other hand, interestingly, large cap has seen strong flows coming in.
Okay, Sharad, thanks for taking us through that. So those are all the SIP as well as your AMFI MF numbers at a glance. Let's get into conversation with Jayaprakash Toshniwal, the fund manager, equity LIC Mutual Fund Asset Management. And Mr. Toshniwal, hi, thanks for your time today. Give us a quick run through of what you are making. What's your first sense right off the bat of these AMFI numbers that we're seeing today? Because as my colleague Sharad was pointing out, sectorally we have seen flows that are down 59% and small cap fund inflows are also around 23% month on month. What picture is this giving you of what the sentiment is right now?
Good afternoon. Thank you for having me here. So yes, as Sharad mentioned, if you see on a month-on-month basis, there is an outflow, and there's a lower inflows in the large cap segment. But even if you see on a large cap side, large cap is generally receiving around 2,200 crore kind of inflows. But in small cap, we have seen, I think, around 4,000 crore kind of inflows. I would say this is a one. There are 2-3 points to highlight. One is that the continuous flow reflects the earning strength of the people in the economy, the kind of savings which we are seeing and which is getting flown into the market. Also, we have seen continued interest across the participation from the equity side. While we have seen the equity market, the cash flow loop on the retail side is going down, but there is a reasonable amount of flows coming from the mutual fund side. So basically the investment is getting more institutionalized, at least on the retail side that we can see. In terms of flows, again, Sharad also pointed out this flexi cap is still seeing a reasonable amount of flow. I think almost last month it was around 7,500 crore. This month is also around 4,000 crore kind of number. So this reasonable flow, I should say, and decent growth on a longer tenure basis. I should continue to maintain that. Yeah.
Indeed, but Mr. Toshniwal, help us understand that what are you making of the outlook with respect to the SIP numbers, because of late a lot's been happening in the markets in terms of the triggers. The markets are getting excited. But do you believe that though we have sustained above that 28,000 crore mark, we are likely to build on to this number in the upcoming months?
When we're focusing on 28,000 crore number for this month, we also, if you look at the data on a 6-month, 7-month basis, and we particularly focus on the number of SIPs getting into and what the number of getting closed. So if you notice somewhere around Jan to March, there were negative flows in negative, which means discontinuation were more than the new additions. That trend has reversed and that trend has continued to go up. I don't have this month's data point as such, but even if you see last month data point also, we had continued increase in terms of the new SIP roll or new SIP enrollment which is coming. And the last which I checked, the SIP AUM was almost 15 trillion number. So that way the things are on track, and this kind of excitement in terms of that, while we are seeing a nominal GDP growth slowing down, let's say in 8.5 to 9% kind of level, but even if the numbers are stable going, which simply means that even the income level are also reasonably stable, and we are not seeing much of the concerns at least out there.
Prakash, what I read is that while large cap fund flows as well as mid caps have risen 33%, both categories on a month-on-month basis, but what's actually seen outflows are sectoral funds, and small cap inflows as well have seen a dip down of about 23%. Is that really telling you about some uncertainty in the market right now with regards to of course, what sectors are going to do well and what's going to happen to the small cap end of the market?
So the data which we are pointing out is predominantly on the cap basis. So to say, the large caps have, as you mentioned, the large caps have not shown inflows. But even in a thematic and sector inflows, which have seen dip, is predominantly because last month there were a lot of thematic fund NFOs, almost 7,000 crore of additional flow which came. So if on an average out basis, almost 2,500 crore to 3,000 crore kind of number, which I can recall. So that way, I'm not seeing much worried about such. Having said that, if we come back, well, market is a function of earnings. What we are seeing in terms of in this quarter also, we have seen a reasonable amount of performance on the earnings side, and especially the earnings was much sharper, much good, I should say, in the mid cap side compared to the large cap and small cap side. As a category, that's what I'm saying. So what we are trying to say, we tend to see market or tend to see across cap, it's predominantly based on the earnings growth per se. And wherever we as an investment, we see that earning growth is slowing down at a 10% kind of level, we need to find, we are looking for ideas, we look to segments where earning can go even 12 to 15% in the near term.
Okay, Jaiprakash, great to have you on the show. Thanks for your time today with that quick take on the AMFI numbers. But yes, it's heartening to see that equity inflows, while they have fallen on a net basis after a record high inflow that one saw in July, but they're staying above the 34,000 crore rupee mark. And the subdued numbers were perhaps because of lesser NFO launches as well, and that's the category which has seen a dip. But having said that, if you look at the SIP data, large cap fund inflows, they've seen an uptick of 33%, sectoral fund inflows, while they are down 59%, mid cap inflows as well have risen on a 3% on a month-on-month basis, and flexi cap fund inflows, they remain pretty strong for a second consecutive month. But Kunal, is that the reading or the pattern in the market as well? Are large caps right now looking the safest bet as opposed to small and mid caps?
Well, it's difficult to say, Aisha, because large caps are the ones which are actually at the brunt of the sharp selling in the last, I think, 10-11 weeks when the markets were going through a sharp correction. So I think in that context, we need to see how the FIs do balance the positions, whether it's a comeback of large cap stocks or whether it's those individual themes which could probably attract the global investors. So I think that could be something to watch out for. We also look out for the coherent patterns. So for example, the likes of L&T, Reliance Industries, HDFC Bank, these are the top three names which have still not participated in the same gusto which the markets have done over the last 2 or 3 days, where the Nifty is now inched back to that 25,000 mark. So I think that zing is missing for many of those large cap names. We'll need to see that element of short covering coming back into these selected large cap names. I think once we start to see that, then we can be of much more higher tilt, that the large caps could make a very strong as well as a durable comeback.
So, that's the thing, right? Like what Kunal was just highlighting, that some of the large cap heavyweight names are still not participating. And I mean, let's pick up the case on Reliance, for instance. Positive announcements coming in from the AGM, still the stock hasn't budged a whole lot and still snapping in a range. And up until the time that you don't have these high weightage names actually contribute, the index as well will not move.
No, I think that's a very nice point. And I would just stress here, adding to Kunal's point, like you said, Reliance, let's look at a few other affiliates. The point is that the domestic fund managers in each scheme are limited to 10% of the scheme for a single stock weight. And my thing is that if you take a read across the large cap funds and the flexi cap funds, most of the fund houses are already at 9% levels. So their ability to add on these heavyweights is very limited. So when you want a heavyweights to rally, it is those who are not constrained by SEBI regulations. And these are retail and HNI investors maybe insurance, and the FIIs. So that's the reason these heavyweights, because, from that point of view, domestic fund managers can't add of these stocks even if they are looking good. They are already sitting on them. So it's a very tactical thing there. There's nothing wrong with the way these stocks are perceived. Of course, FIIs broadly, if you look at it, the passive flows account for a significant proportion, and passives buy all the index heavyweights. So when FII flows are coming down, naturally index heavyweights flows are also coming down. So it's a simple, very easy to understand this, and for that very reason, I'm saying if we are going to look at the fact that the tariff scene is going to get better, not worse, if you're going to look at the fact that the domestic economy with the festival season is going to get better, not worse, then definitely I would say that somewhere FIS flows, when they turn around, it is these heavyweights which will get. So that's why to say that today, because of the impact the large caps have had over the past few months, like Kunal was saying, it's today a safer place to play in, because a lot of the mid-cap names, especially consumption-driven, have seen a very strong rally post the 15th August announcement and then the signing of the GST Council. So there's a lot of rally that already happened there. So you are likely to see some profit taking there, and then it will probably get into what is called as the safer space, which you call the large cap. So I agree with Kunal's assessment, and that's where the flows of this month, I was seeing all the discussion around it, and they reflect the maturity of the distributors and the investors, that you see in this volatile period, they have actually increased allocation to large caps. They brought it down to small caps, and they brought it down from sectoral funds. So indicates the maturity of the investors to a distributor also. And second, for last month's flows, if I may just pitch in there, you're saying that, there's a huge drop, but you take it two things into account. One is that if the previous months, 2-3 months, was only around 25,000 crores, last month it spiked to 42 because the sectoral NFOs spiked. So if you take off those impact, it's actually much better than the run rate. Second is, last month was a holiday heavy month. There was Independence Day holiday and the Ganesh Chaturthi holiday. So because of that, the number of days that is there was also less. So I'm not at all worried about the flows. I think they reflect a very strong, maturing and supportive domestic investor. But that's where I want to say that since the flows are mostly in mid and small cap, you can't ignore mid and small cap stocks or sectors at this point in time. So it's better to have a balanced approach across large, mid and small. Large cap because of the FII return anticipated, and mid and small cap because domestic buying is going to be concentrated around that, and the impact of the GST cut is also going to be largely felt in the mid and small caps. Apart from FMCG, which is a reasonable weight in large cap, your discretionary consumption, realty, all the rest of the pack which will get a benefit from the GST cut are largely in the mid and small cap space. So keep a balanced approach to portfolio allocation across large, mid and small, and that's where multi-cap funds as a category, I would say, sound the best, because they have to allocate 25% each to large, mid and small.
Coming in on the allocation front, but just a few minutes left before we shut shop. And apart from IT, one such sector that is doing well, and Kunal, I wanted to have your take on that. That is the defense pack. Look at the move in BEL, Moscow Dock, HAL. They are any which way flying higher by 2 to 3%. No such big news flow out there, but technically, are the stocks showing some sign of interest coming back?
Yeah, I think so. It started off with the short covering for names like BEL as well as I think Bharat Dynamics, and then I think now we could be looking at these stocks starting to show signs of trends. What could also happen is what's actually happening is that many of these stocks have shown signs of indicator breakout on their daily charts so far. Now this could be a first preemptive indicator that the stocks which are coming out of almost like 8 to 10 weeks of a consistent price downtrend, and I would expect that if this in case is a major turnaround, then we could be looking at least another 2 to 3 weeks of a consistent upside for many of this defense packs. So it looks to be a very attractive space at current levels.
Okay, on that note, let's begin winding up for the day. And Sunil, good to have you on the show. Kunal, thanks as always. Let me hand it over to Shesha for the closing trades.
Well, yes.